Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 21st, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. This is the high-level overview. Wave 1 is done, working on wave 2 down. We're going to eventually end this wave 2, whether we keep going lower where we originally talked about 40 plus years ago, or do we end here and start breaking out somewhere between where we are in this 80 range would be where we should reverse and then go eventually breaking out. For many months now, when we got these lows, I said, based on price action, this doesn't look like the low. We'd probably go lower low. Then the next one came up. We got a little rally based on price action, based on resistance levels. We couldn't break them. We then likely go lower low. Then again, from this swing point, we talked about the overlapping chopping price action going into this on a daily chart. That still said, still corrective, likely going lower low. We did it yet again. And now we're sitting at this last swing point low. It could be over and we could go breaking out, or we could continue to break lower. And again, the last multiple months, I said I didn't think that was the low, we'd make a new low. Didn't think that was the low, we'd make a new low. Is this the third time's the charm? This is likely still not the low. We're probably still going to go lower up and until price proves otherwise. So let's jump into the charting platform and show you what we're looking at. Ian, James, Mr. Tucson, Alan, we're stuck between resistance and support. We retraced after the big move, which we expected, and we said if we would break the magic fibber, we're likely going to come down and test the support zone, and we came awfully close. But a lot of times, awfully close is not enough. So this latest price action is just chopping and grinding. What does this look like from a higher picture here? This looks like a nice rally up, and this looks like a 1, 2, 3. We're just kind of chopping sideways in a 4. So as long as we stay below this bottom here, where that first leg down, this corrective action should say we need one more push lower. Do we break the support zone? We do. We go in lower low. We break above this resistance zone. We're likely going to retest a high, which would push us toward that 102. So I know we've been discussing this for months now. 102, and I'll go to the higher picture here and give you a weekly view. And I'll bring this into view here as I kind of consolidate this a bit. 102 up here is the short squeeze. Since last year, everything was short to dollar, short to dollar, short to dollar, short to dollar. And there's a lot of money riding on shorting the dollar. So the big level to watch is this 102 resistance level. Former support, term resistance. We tried it over here, went right to 102, failed, continued lower. This is kind of where the short squeeze, in my humble opinion, is sitting. Why am I bringing that up? If we were to rally, and we get a daily candle body to close above this 102 right here, I think you'd hit the short squeeze, and that would force price to go make a run toward this 104 and change. It's right behind my cursor, of course. That 104 and change up to 107. So we can kind of round it off if you want round numbers, 105 to 108. But this big pink box is a major resistance zone. We not only tested it for last year or so, but even going back in the history of this dollar index. See that pink box? There's been a lot of activity in this pink box over the years, over the decades for that matter. So this is going to be very strong resistance at the moment. We get above it, it's going to be extremely strong support. But for now, it's going to be very strong resistance because we're well below it. So just look at that level. And as you can see, every time price gets in that arena, especially in the last few year plus, multiple months, we see that we've seen a lot of this test into this zone, fail, test, fail, try to get there, fail, get up, ooh, we're going to break out, no, we're not. Then we're going to break out, no, we're not. Then we finally broke out, but we couldn't hold it. And if you go back several months and even last into 2024, when we finally got this breakout, I said, based on this movement down and all this chopping and overlapping, we still needed another thrust lower. Well, we got that, right? I said, this is not breaking out right now. We got to go lower low. We did that. But now look at price action. It's doing the same kind of thing, just chopping and grinding. So it may need that this last push, this consolidation, we need another push lower. That would kind of fit the terms of what we talked about so long ago, that we were looking for this much higher degree, not from this COVID low, get a 618,786 retracement, but from way over here, from this low back in 2008, early 2008, where we had this low, we were looking for that low to high somewhere around that 618, put us around 8750, down to 786 would be 80. That was kind of what we were looking for, somewhere 618, 786 retracement. Are we going to get there? Up and until price gets above this guy right here, that big pink resistance zone, then we really can't call the bottom a bottom yet. So far, so good. So we get above that, then it's pretty keen to say that is the end of the retracement and we are going to go breaking out. What's the target? The target is up here around 130, 140. So I truly believe we're definitely going to go to 130, 140 area, at least 130. And that should take probably several years. So we're not talking about, well, if we break above this pink box, it'll be a few months and we should be way up here. Anything is possible, but I'm thinking it would take multiple years. And, prior, like they say with trading results, past results is not indicative of future results. Well, past price action is not always indicative of future price action, but history of price, as price always has a memory like an elephant, and the support zones, resistance zones, etc. This typically, when you get these runs in the dollar, they typically take multiple years for these big runs. So this is why I'm telling you, if we're going to make this run up here, it should take multiple years. That just goes back into history that this dollar index takes when it goes on their big runs, whether it's big runs down or big runs up, it takes multiple years. Got it? So we're talking about a big run from where we are, if we don't go lower first, all the way to this big box up here. That should take multiple years. So that's what I'm thinking. It should take multiple years before we get here. I still think it's extremely high probability we're going to go. The 120 was this zone over here we tested last. So I think when we do start running, we're probably bogged down around 120 because it is a huge battle zone. It was former support where this started. Then it turned support, resistance, multiple resistance here. So I think we're definitely going to break that eventually en route to this target. But as we're running and stair-stepping our way over the years to come, we're probably bogged down around here. I don't just see us slicing right through it. Oh, we hit 120 and we just go to 22, 23, 4, 5, 6, 7, 8 and go straight into this box. I think we'll hit that target, get a nice pullback off of that, then maybe go up to eventually get here. But that's why we're talking about stair stepping for multiple years. So far, so good. Well, that's great, Gary. I got the big picture. How much lower do we go? The question is, are we going to do that 618, 786 retracement off of this low back in 2008? Right now, as we zoom in on more current price action, we can see we're in the midst of that 618, 786 retracement off of the COVID low, which occurred back in 2021. So you rally up, you come down, we're in the midst of that 618, 786 zone. But I still think up and until this is over, we're probably more likely need to come to this 85, 82 zone to kind of complete this much bigger, longer term retracement, which would be that 618, 786 zone off of that lower low back in 2008 we're talking about. This is where the original target we mentioned we're likely going to go, because I was looking for a 618 right around that 87 range, down to a 786 as low as 80. Somewhere between that 80 and 87 is where I originally targeted. And I thought we'd get a lower low below this to set the tone for the reversal to then go breaking out to 130, 140. So I still think we're going to break this, move toward that 120, eventually break that, then move up toward that 130, 140 target. So the question remains, do we need to go lower first, or is this the beginning of a breakout? So when you start zooming in and you look at this current price action, most recent price action is that rip. This looked like a potential 1, 2, and then this right here could be 1, 2, 3, 4, 5. So this could be a 1, 2, 3, 4, 5. That could potentially signal this is the bottom. We need a 3-wave down, but this is stretching it to extreme. So as we talked about with a 3-wave count, you use this little 3-wave 2 here, 3.2, the trend-based Fibbo extension. So when I look at this high to this low to that lower high, we went beyond the 1618. So if we were looking for a 5-wave up and a 3-wave correction, typically when you get this 3-wave move, you don't push beyond a 1618. You kind of fall short between equality, which would be the first leg A would be the B correction would equal C. So when A equals C on this 3.2, that high, this low, that lower high, that would have put us somewhere around this magic Fibbo level, and that would have been where this move, and I'll show you with this red arrow just for graphics, from that high down to this low. You do a duplicate move from where you correct in B, and you could see at points where A equals C would have been right here around that 93 and change. Excuse me, 98 and change. Sorry, 98 and change. But we surpassed that. Typically, you can go where A equals 1.272 of C. So then it would push us down to the extension. But we kind of stopped there, and this looked like, well, that could have been the ABC, but look at what we did. We blew past even further. So typically, if this was going to be, ladies and gentlemen, if this was my A, and that was my B, and this was my C, you typically would stop somewhere between that equality and the 1272. You don't typically go and push beyond a 1618. When you go beyond down to a 1618 and beyond, that typically sets up not an ABC, but a 1, 2, 3, you get a 4, and then we come down in 5. So this is why I'm not convinced that this is definitely the bottom. It's possible still, but this price action's kind of leaving a little bit to be desired here, because this looks like because of the extension, right? This move here and the retracement, the length of this down move was impulsive, and it exceeded the 1618 of the original move. So notice how much bigger that A wave is, the C wave, if this was what we're looking at, to A. That would be the A, initial move down. We got a correction. Then this is way short. Look at how much longer that is. That I have to pull this thing all the way down here. Look at how much longer that is than this little correction there. Much longer. So this again, just looking at this most recent last week or couple of weeks here, this says that this is probably not finished to the downside. I did say just generically, we break the magic fibber, we'd go test the support zone. We came awfully close, but I'm not convinced that this is the end because this looks like a 1, 2, 3, and this chop sideways can last. Typically, this is a couple of day retracement. This one would typically last 3 to 5 times longer than the wave 2 correction. Wave 4 alternation, where you get wave 2s typically happen a little faster. Wave 4s chop and take longer, 3 to 5 times that. So we could still chop here for several more days before we push lower. Well, is that push lower going to be where we just get this final move into this zone and then go breaking out? Or do we push below this? We start closing below the green box, then it sets the tone. We're going lower low. I still think we have a higher probability of going lower low than we do going breaking out just yet. Again, how do I know? Because up and until we get above this big resistance zone, you cannot call this bottom as an absolute done, stick a fork in it. The dollar index will not go any lower than the swing point low for many, many years. And before we'd ever go lower than this, we have to get up to that 130, 140 target. So this is way too early to call that this is a bottom. This latest price action is telling me it's not finished. A, we didn't reach the support zone I was looking for. And B, this looks very impulsive, 1, 2, 3, and we're correcting 4. So it's telling us we need another thrust lower. Now, if this thrust actually pushes us below and we get a daily candle body, not just a wick where you kind of wick down and get a quick reversal, but a candle body closes below that, then it says in the highest degree possible, we're going lower low. And what happens if we go one tick lower than that right there? Then that's obviously not the low in which we're going to reverse from. So maybe we get down here. Do we reverse from there? Or do we do another correction and continue? Well, there's a rule. And we look at these rules over and over. I'll go back to the weekly and show you what that rule is. From this COVID low up to the current high that we're definitely going to go breaking out of en route to 130, 140 years down the road. The question is, how soon do we bottom reverse and start doing it? Well, we did take the 618 out. We have a daily candle body below that 618 level. We're below it right now. You can see 98.97. We're at 98.20. We're below it right now as we speak. But we were just down here at 95 before, and we started bouncing off of that. So we're well below. We just didn't quite break below the 786. But the rule is you get a daily candle body. In this case, weekly is even stronger. Monthly is even stronger than that. We have all the above. We got a daily candle body. We got weekly candle bodies. We got a monthly candle body that close below that 786. And the rule is you get that, you have a 75% chance you're going to grind down, in this case, down toward a 1448 extension. And a 70+% chance you're going to go toward the 1272, which is around 82. That's right in the wheelhouse what we were looking for that 4 years ago. We were looking for a 618, 786 type of retracement, and that would put us between that line right here, 87, and this 80 down here. That's off of that 2008 bottom around that 74 that we rallied to, that I'm looking for the 618, 786 off of. So based on this low, that high, closing below that 786, we still have a 75% chance we're going lower, not only lower low over here, but lower low than this COVID low, which would put us somewhere around 85, 82. And those targets, my friends, is very close to our original target, as we were looking for at least a 618/786 retracement off of the low back in 2008. Fair enough? So what is that low off of 2008? I keep showing, well, that's this low on this chart I show you every day. That's back in here around early 2008. We rallied up. We're looking for a retracement somewhere for that wave 2 to end, and then we go breaking out. So this is why I don't think this is still the end. It's possible, but not a high probability at this point. When it's become extremely high probability, this is the bottom and this is done when we break above that 105, 108 target. So once that happens, then you can say, yep, this looks done, Mr. Tucson, we're off to the races. But for now, still think we're likely going to go lower low because of that. So we've been explaining this high, this low here to that high, took the 618 out, daily candle body, weekly candle body, monthly candle body. All that still says we have a higher chance we're going lower low than we're breaking out for now. But I would be remiss if I don't keep pounding in the submission on that. That wave 2 will end and we're going where? 130, 140 up here in the years to come. That's where we're breaking out to. It could be over, not likely, probably still need to go lower low. The question is, do we go lower low below COVID low, or do we just go lower low this recent low and then reverse? Well, this is why we keep looking at price action. I have a God-given talent to read and interpret price on a chart. And when I see this type of action, this right now, as I've just been reviewing, this doesn't show, even though we got a nice retracement from the low up to the high, right? Hadn't even reached the 618786 support zone. That's this green box. This looks impulsive, 1, 2, 3, not an ABC because we just reviewed that. If this was going to be the ABC correction and we were going to go continuation, then typically with the 3-point tool, the high to the lower high, this push down in wave C should have stopped somewhere around that 98.90, maybe down in that 98.50 zone. We initially did, but we couldn't go anymore and we went much lower. So now when we look at this high, low, lower high, we're pushing beyond, and we actually did push beyond that 1618. So what does that mean? If it's an ABC, it should not go this far. When it does go that far, it's extremely much higher probability. This is a 1, that initial move. This correction is the 2, terrible looking 2, but that's the 2. Because we push well beyond, and actually nicely beyond that 1618, this is likely the 3. And what is this chop going on right now? That's wave 4 correction. Typically wave 2s happen faster than wave 4s, and it's an alternation where if this takes 2 days, this will take either 6 to 10 days. It's 3 to 5 times longer in a wave 4 correction than the wave 2 correction. So whatever wave 2 takes, multiply that by 3 to 5, you get a little zone in here, how long it would take. And typically, as long as you stay below that low, which is the initial move down, whatever that low is, we're going to show you this on gold. Gold hit high, pushed down that 500 zone. It retraced and went further. Now it's retracing back up. So if it stays below 5,000, not 500, but 5,000, we're likely got to get another push. And I still think gold's going to give us another thrust down toward that 3,900, 3,700 zone before we're done. If it breaks above 5,000, then something else is going on. Same thing with this. If this is the 1, 2, 3, and we're working on 4, if we go breaking above this 99.50 area, then something else is going on, and that would be a first sign of something. Well, clearly, we need to break above this resistance zone before we can think about going even higher. Fair enough? And before we can truly call it with a high degree of certainty, we got to get above this big zone up here. This is important, but this one's way more important. So what does that mean? This looks like we got to get another thrust lower. Do we hold the support zone and bounce? Well, it was just a few weeks back when we saw this same type of thing. We're talking about this chopping overlapping. We had a beautiful A, B, C correction. Why beautiful? Because A equals C was in the parameters where this A equals C is not. It's way out of whack, pushing a 1, 2, 3, 4, 5 type of move as opposed to an ABC. This one did perfectly within the parameters, so we got lower low. Got it? So then we got this low, and we talked about it, saying, well, based on all this overlapping, chopping action, this doesn't look like it's done. It's too overlapping. It still says it's corrective, so we likely need a lower low. But before we got there, look at this beautiful 618 retracement. It was perfect, right? Kind of like what we're doing now. Nice run up, 618 retracement. We bounced off of that and rallied back to the magic fibbo. And if you look at the high to this low, there's that 618 right there on the upside. So from that high to this low, we stopped in our tracks at a 618. We failed and we went lower low. Lower low than what? The prior low, which we called for. So based on this radius low, we did it over here. We're likely to get a new low. We did it multiple times, last multiple months, right? We did it. That doesn't look like it's finished. We're going lower low. This did it again. We're going lower low. This one, even though it looked and it had proportions, it bounced off the 618. It would look like it wanted to break out, and it did not. It stopped where it had to, got rejected, went lower low. So why we still think this low is not the one? We got to see if we end up with this last move down, does it hold the 618? Even if it does, let's just say, what if, William Bruce? Gary, you're right. That's a 1, 2, 3, 4, 5. We stop in this green box. We bounce out of it like we did over here. We rally back. Then we got to get above this pink box. So even if this gives us that last little thrust into here and we bounce into this zone, it still could get rejected and we go lower low. So what do? We're going to take the high. We're going to take whatever the low is once it thrusts down here. Then we look for 618 back to the upside. If, like last time when we did that, we could not break that zone, 618786, to warrant going higher, we stopped. We went lower low. So again, what if this comes down here, it bounces, does another 618 just like before, it rallies, and it rallies to that 618786 from the high to the low, rallies right back into it, fails, that's still saying we're going lower low. And if that's not enough to convince you that we still got another thrust coming lower, then up until we get above this, I'll change my tune. We get above this up here, then we have a 75% chance we're going higher high versus a 75% chance we're going lower low. And that doesn't flip-flop until you clear this hurdle. Got it? So up until then, be careful on any type of short-term rallies. They should fizzle. And I expect we could probably grind sideways for a few more days. We don't have to, but we could. And then we get a thrust down. If we hold this green box and bounce, then don't take it too seriously. So what if I get this push lower and I scalp this back up on the bounce? Be in a position of authority, because up until we could clear this pink box, this thing could still give us just a simple retracement failure, just like we did over here. A beautiful retracement, a bounce, failure, we go lower low. And this could be the bigger degree failure for lower low. And all roads still lead to lower low more than we do breaking out. So there's a couple of zones I want you to keep an eye on. You can set alerts today, tomorrow, next week, next month. I don't care when it happens. We close above 102. That's the short squeeze. Expect this thing's going to rip somewhere between that probably 3 points to 5 point range. What does that mean? You hit the short squeeze then thrusts this higher to push toward this big resistance zone. This big resistance zone, when we start getting in the vicinity of it, is going to act like a magnet to suck price into it. Right? So far, so good. So close above 102. not a bad opportunity, in my humble opinion, to go long for a bounce. I can't tell you what to do. I'm just telling you what price action is screaming. We close above that 102, short squeeze is going to push price toward that box. Again, in my humble opinion. Up and until then, we close below this green box. We're going lower low. Pretty simple. In the interim, while we're stuck between the big support box and resistance box, I expect more chopping with the higher probability we're going to push lower, because even the most recent price action now says we still need one more thrust lower. And once we get down here, would not be surprised to see a bounce off of that. But is it going to go like this one? Bounce, but go lower high, right? Lower high than the previous, and go lower low. Well, is this going to bounce, go lower high, run into that resistance zone, and do it again? Up and until price proves otherwise, no reason to believe it will not. And again, we have a 75% chance we're still going lower low, then we're going to go breaking out. And that doesn't flip until short-term breaking out is not 130, 140. Short-term, we get above this box, then we're likely to go to 101, 101.70, and maybe potentially push us toward 102. And that's why I would tell you, is it possible this thing could go like that, fail, go test 102, not close above, fail, and still go lower low? Yeah, it's even possible we could hit the short squeeze, get pushed up into that box, and still go lower low. Why? Go out to the weekly chart. Look at where we came from. From this high down to the current low, guess what this is? That's my 618786 zone. That's why it's so important. So even off of this down move, we could get a 618786 retracement, fail, and still go lower low. So you do a list of pros and cons. The pros to go lower low is this one right here. That low to that high, we took the 618, like I was saying, daily, weekly, you go to a monthly chart, it's all closed below that 786. So that strategy says we have a 75% chance we're going to lower low to around that 85, 70% plus we go down to about 82. That's in the neighborhood of what we were looking for 4 years ago. In the short term, if we break below this support zone, my extensions are down in this box zone, which would be this shorter term target. And guess what? If we get down here, then we actually take out that 786, which then reiterates. So, Mr. Tucson, if we can get down here, Emil, we get down there, my friend, we got a reiteration or a confirmation. We got a 75% chance we're going down to 85. We got a 70+% chance reconfirmation we're going down there. So this is why it's going to be hard to say, even though I'm telling you, it's definitely going to go breaking out to 130, 140. But where do we finally bottom to reverse? We shall see. So when you look at the big picture, we're likely going lower low. Small picture, we're still likely going lower low. And I mean, it's big difference. Lower low here is 85, 82. Lower low here is like 95, 93. Big difference, like 10 points or so, right? So that's a big difference. So yes, short term says we should go lower low, higher probability. Longer term from this scenario says we should go lower low. And if we can get this, then it breaks the 786 of the longer term, which then reconfirms this is still likely. Amen? All righty. So why I keep saying we're likely still going lower low in the short term. That's where this came in. And I'm just reiterating before we move on because it's an important concept. And the more I keep pounding you with it, the more it'll make sense. This initial move down and initial move up, we should have stopped somewhere around that 98, 94, down to somewhere in 98.50 zone. We should have stopped there if that was going to be the ABC. If this was the initial move up, my little three-wave correction, and then we go blasting off. This should not have gone that deep. Because it went that deep, this does not look like an ABC now. it looks more like that 1, 2, 3, right? 1, 2, 3. So notice where this low is, the initial move down. I'll get a crosshair on there to get that number for you, but it's roughly around that 99 and change. So 99.50, just round it off. That, well, actually it's a little bit lower. So that low is 99.30. So as long as we stay below 99.30, this is likely, meaning we could chop sideways in here. As long as we stay below that, we're likely going to get another thrust lower. Because 1, 2, 3, 4, you got to get your last thrust. Got it? So the short term says we should go lower low than where we are now, lower low than that last spike. Any questions? So just bear with it that this is likely going to chop and grind. In my humble opinion, any short-term rally should be sold. And when do you say something else is going on? We got to break above the magic fibbo. Remember last time we tried to do that? It failed miserably and we went lower low. So it's not an easy task now that we're below it to break above this, but we still would have to break above this 99.30 in order to say, uh-oh, something else is going on. So as long as price is below 99.30, any rally should be sold because this should falter and go lower low. We're still targeting the 97.50 down about 96.50 where this next thrust lower should go. Now, what if we get an overkill, kind of like we did on this one, kind of overshot? What if we overshoot and we close below this green box? We close below 96.50. It's over. We're going lower low than this previous low over here, which was that 95.55. We do that, Houston, it's over. We're going lower low. So this is my shorter term target where we're likely to go. And then the most immediate term would be this stays below this 99.30. We go thrust lower into this 97.50, 96.50. And if it overplays it and we close below that, we're going lower low. But in every case, short term, we're likely got another thrust coming. And I don't mean, well, today this thing could grind sideways and tomorrow we can have an up day, a down day. This thing can chop and grind. Why? Because this wave 2 correction took about 3 days to finish. And if you use this low, we're only into the 3rd day now. And typically this is 3 to 5 times longer than what wave 2 takes. Wave 2 took about 2 to 3 days. Wave 3 can now take 3 to 5 times that. 3 to 5 times to put it somewhere around that 6 to 10 day range. So this thing could chop sideways for days. It's kind of grinding, grunt, laboring, decline, just chop. Stuck between support, stuck between resistance, and we could chop in here again as long as we don't break that swing point right there to the upside. This still says we got another thrust lower. If the thrust is below the green box, we go lower low. So bigger picture, we should go lower low. Smaller picture, we should go lower low. Only difference is the lower lows are different levels. And the bigger picture is lower low pushing down toward that 85.82. This one, we get below this green box, would then say we go lower low below 95.60 area / start targeting 94 down about 93, maybe 92.5. All right. So this is where I think we're headed. Before we go breaking out, and I don't mean chop sideways, but before we're likely going to clear this pink box to go higher, we're more likely going to break the green box to go lower. All right. And in the interim, expect chop and grind sideways. This is typical price action before we get lower low. I think that's enough of that. Why is it important? We know where the dollar index is going. It's dollar index is made up of a basket of currencies. The most predominant basket is the euro dollar. And if we know where the dollar index is going, we know where a lot of asset classes are going. So let's jump in and show you, well, the pound and the euro. Why is that? We expected if we were going to break the magic fibbo, we'd make a run toward the resistance zone. I said, actually a week plus ago, if the dollar index breaks the magic fibbo, we're going to make a run toward the support zone. And I said at the same time, should that happen, the euro is going to break the magic fibbo to the upside and make a run toward its resistance zone. And look, it did exactly that, made a run toward the support zone, and the euro went exactly, broke the support right here at magic fibbo, went exactly to the zone. Is this over and we're ready to call it quits? No. This too is the inverse. Since the basket of currencies, the most predominant currency in that basket is the euro dollar, it's perfect inverse relationship. I mean, perfect inverse relationship. So what does that mean? This looks like a 1-2, and because you do the low, the high, and the higher low, we exceeded the 1618 up here, just like the dollar did. Then this is more likely what, Emil? That's likely the 1. That's the 2. This is the 3 correction. Well, this move up was the 3. And this chop sideways is the wave 4 correction. And we should go popping to finish that up. Well, what if we close above this pink box when we do it? Then we got a 75% chance we go into 121.70. 70+% chance we go into 122.60 up there. Hundreds of points higher. I like it. So if you're long, be in a position of authority. Yes, we could correct a little bit more and chop, but I'm not looking for a big push lower. I'm looking for this to kind of chop and grind and give us that last thrust into this pink box. And if we close above it, then the new targets. Why do I still think we got a big chance of going much higher than just this target up here? Go out to a weekly, do that bigger picture, and come back several years ago. We have this high back in 21 to the low in 2022. And notice what we did. We took the 618 out a long time ago. That said, we have 75% chance we go into 127.50, 127.45. We have a 70+% chance we go into 130, 131. That's still on the table up until we break this big green box. So you notice I had a big pink box going across on the dollar index up at that 105 to 108 zone. Well, we have a big green box down here. And if you go back in history, just like I did with the dollar index, look at this box, how it interacts with price on the euro dollar. So up until we're above it, well above it. So we're above this now. As long as we're above it, this is very, very strong support. We get below it, then we're going lower low. Well, guess what? When the dollar goes ripping to 130, 140, the euro is going to go declining down to this 0.8, maybe 0.7 range. It's kind of my longer term target there. Inverse relationship, the dollar rips to 130, 140, the euro declines down to 0.8, 0.7, could even push into 0.6 zone. That's a long way off from where we are. Big time. So the whole deal is when this was called 4 years ago, we said it'd be a nice idea that we're going to get multi-years and thousands of pips in a correction before we make some sort of lower high to go lower low in a B, C, much bigger picture. I've been showing you this chart for some time. If I can get that to come up for you. That chart for some time, but on the euro dollar, we're looking for this much bigger picture. And all this is an ABC correction. That's all that is. So when we called this low and said, not a bad idea to be long the euro dollar, it's going to climb, take several years to go thousands of pips. And we're looking for some sort of A, B, then come C, lower low, eventually. The question is, was that last little push there the end and we're going lower low now? I don't think so. I think we're still got more upside to go. The question is, where do we finally end before then we go lower low? All right. So just like I was explaining with the euro, the dollar index, The euro, from that said, we should go to that 127, 130 range. Well, this is the shorter term target we should go to. And longer term target, we could even go a little bit higher, but this would be this is the longer term target. Sorry, we're on a weekly. This is where we ultimately should go to reverse. This would be the bigger ABC correction, and then we go lower low. Got it? That's the plan. Now the question is, how much higher do we go before the euro reverses? How much lower do we go on the dollar index before we go breaking out to 130, 140? And how much higher do we go on the euro before we go breaking down into this 0.8 to 0.6 range? Big bubble down here. What's the likelihood we get down here? Extremely high probability, but it's years away, right? So look at the current price action. So we got longer term says, much longer term, the dollar is going way higher, right? 130, 140. Longer term, the euro is going way lower. That's true. But in the shorter term, how much do we stop here and go breaking down now? Or do we kind of retrace and chop and still go higher? Well, right now, we didn't break from the recent high to low. We haven't taken this resistance zone out, but this last little 1, 2, 3, and this even looks like a subdivide. 1, 2, we got another 1, 2, 3, 4, 5, and that could be the wave 3. And then we do another 4 or 5. The next thing you know, we're up here in the 120s. Well, bottom line is this: we close above this pink box. We're going to 121.70, 122.60. That's my targets. In the short term, I expect this to stay between resistance and support and eventually go breaking out. The bigger picture, when we went to that weekly, we showed you this. From 2021 down to 2022, we took the 618, we took the 786 out, both. Candle bodies, not wicks. That's why this is still an extremely viable target. 127.50, 130, 131. And you see my bubble up here, extremely high probability where we're headed. Do we get there? This would be a much bigger A, B, C, which I would look for. All I can say is we get up to 130 and higher. This is salivate country for us to go breaking down thousands and thousands and thousands and thousands of pips, because from 130, 135, split the difference, 130, 140, say we go to 135. That's 3,500 pips to get to parity. And we're talking going another 3,000 or so below that to put us down at least 2,000 or more to get us to that 0.8, 0.7. So you're talking somewhere 5,000 plus pips. I like it. But in the short term, we still got more upside. So when we talked about buying the daily reversal on the software, get to your position of authority, that's where you should be, right? Come over here, go to the software, go to the euro dollar on the daily chart. Like my connection's a little slow on my trade station today. Come on. Well, anyway, there it is. So why are we getting this little bit of a pullback? The daily reversed. We said we set the trigger to automatically trigger to go higher. We said get to a position of authority, let it continue to run. The daily made the cycle. We kind of called that this was likely going to cycle up. We're there. So now what am I looking for? This daily to turn not turn over and cycle, but turn over to slingshot higher. So this should chop in that last one, get the last push higher, as this will slingshot back up. Why is that? Check out the weekly. The weekly has a beautiful reversal, and we have a PAI hook, trend momentum cross, steep slope, angle separation. Bingo. That's telling me more upside. The technical picture says, based on that little 1, 2, 3 chopping around 4, we're likely going higher high. The software is in agreement. We're likely going higher high. Amen? all is good. So any pullback on the euro should be bought, as we expect this still to go higher. And if we break that little resistance zone, then it's not only this high, but the extensions above that, that 121, 122.50 area, which would be several hundred more pips for that target. Got it? So here you go from the charting platform. What are we looking at? The next push higher, as long as we stay above this magic fibbo, this little support zone, we expect to go higher high. We get above this, then it sets the tone. We're going to this extension, 121.70, 122.60. Amen. So any pullback should be bought, and we look for this to go higher. What about the pound dollar? Same thing. We said the same thing. We said if the dollar breaks below the magic fibbo, it would head toward the support zone. The euro and the pound would break above the magic fibbo and head towards the resistance zone. Now what are we doing? This looks like a 1, 2, 3, 4 as well. So this latest price action, this initial move up, this pullback to a higher low, this big rip, this looks like a 1, 2, 3. And what's the chop doing? This chop as of late is the wave 4 correction. So that says we should get at least one more push higher. At least. Well, what if that push closes and we close above this pink box? Then it's game on, hundreds of pips higher to 139.80, 140.70. Why am I much higher probability we're not only going to get to this and we'll correct and do, but eventually keep going higher? Because of what? Same thing as the euro I showed you. You go back to that same time zone. And from this high to this current low over here, we broke the 618. That was over in this time. That was a long time ago. We first got a big candle body on a weekly chart back in July of 23. So we're going to 147.90, 152. Then we rallied as we correct and chop. We rallied up to the 786, got a nice big pullback off of that. Then what happened? We closed above it. That's that 134 and change over here, 134.11 it looks like. Well, look at where we are. We're above right now. We're trading above that 786. So what's the rule? You close above the 618, you got a 75% chance you go to the 1448. 70 plus, you go to the 1272. Then we tested the 786, got a nice pullback. Then we closed above that, reiterating. We're going to 148, 152 area. So this is why I think not only do we have a higher probability, we're going to this 139, 140 area, but this bigger picture says we got to, and it recalculated and reconfirmed that we should go up to 148, 152. So is that what we need? This bigger correction into this zone before we go lower low? That's the plan until proven otherwise. So notice the big green box. You do like I did on the euro. This is the one for the pound. You stretch that baby out as far as the eye can see. And you can see every time the pound has been in that area, which hadn't been a whole lot because the pound hadn't been down at these lows that much until recently. It was much higher. But look at it since that zone. It is a very significant zone of resistance, right? Everybody see it? So we broke it back to the upside. So this is going to be very strong support. But the plan is when the dollar goes ripping to 130, 140 years from now, this pound is going to go back below this green box and go lower low. And I'm calling for below parity somewhere in the 0.9, 0.8 range. What does that do for us? Well, we get the pound down at 0.8. That means our dollar is stronger than the pound. And it'd be a good time to go to Europe and go visit. Our dollar will be strong. When our dollar's up at 130, 140, this baby's going to be down here below parity. And that's when it's a good time to go visit Great Britain. Get more for your buck than you get now. I digress, but you get the point. So in closing, be careful with the chop right now. Longer term says we should go higher high in the short term and the longer term, But eventually the big picture is we're going lower low. So this is part of that multi-year. Remember when we were down here and I go, man, the pound at 103, that's an overshot to the downside. We're going to get multiple year, multiple thousands of pip correction. And we're up thousands of pips already. And potentially there's still a few thousand pips lingering from 135 to 145, be like 1200. If we can push even beyond this, maybe we push it up to 160, then that could be a couple of thousand more. When we were down here at 103, we're up 3,300 pips already off of that low. So that's what I meant by this thing's going to go up thousands of pips over the next multiple years. And then we push those limits up here. Then we talk about, well, then we could go short. And this, if we get up to say 158, just to get the parity is 5,800 pips. I like it. And we're going to go below parity. So it's even more than that. I digress again, but you're getting that bigger picture. So bigger picture says from this low, that high to this low, we should go up here. Amen. Shorter term picture says we should go higher high still because this correction doesn't look finished and we still got to push. We close above the pink box. We target 139.80, 140.70. We start getting above that. Then we start targeting at 147, 152. And yes, this will take months, if not a year or longer before it gets up there. I don't see the pound just ripping to 139, 140 by tomorrow. And then next month it's up at 150, what was it, 147, 152 area the month after that. We're probably talking, if we get that high, it's going to take multiple months, maybe even a few years still to get there. And this bottom occurred almost 4 years ago. So I knew it would take years to do it. We're in it 4 years. Could take even a little bit longer, obviously, to finish. All right, I think we digress with that. Be careful on the euro, yen, and the pound yen. I called last week that we were going to get a reversal. I was able to make some pips on that. If we get pipped out, we're kind of getting a little bounce. But this thing is setting up for another push lower. Be careful. We kind of went to the extension. We hit it, that 187.70 area. I shorted that, made a couple of hundred pips. Now I'm waiting to see if it's going to rally up. If it rallies up, I'm going to sell it again. If it pips me out, because I still got a little something on board. If it pips out, then I'm going to go continuation. Amen? Any questions on that? So why do we look for that? You come over here and we look at the, that's, I think I have one in this platform, but let me pull that up. Euro yen. It's kind of weekly's overbought, monthly's overbought, daily's back in overbought territory as it started to turn over. So what I'm looking for, ladies and gentlemen, you see how the daily's starting to slingshot back up against a weekly that's turning down and about to turn over and from overbought. So we got a monthly, a weekly, and a daily back in overbought territory. What does that mean? You see this red line on these two scales? We're above in that zone. So if this were to disengage, what does that mean? This red hooking up turns down, blue hooking up turns down, green hooking up turns down, and it disengages, then we're likely going back to this low and make lower low. Just looking at the software, this baby starts hooking back down. We're going to go back to the low and make a new low. That's pretty cool. Who's sitting there? Our daily magic Fibbo. Look at that. So this price action looks like it's overlapping, chopping. This does not look typical where we're just going to keep ripping higher and keep it going. This looks like we got an initial move down, correction. We need another correction, at least to a new lower low, put us down around that magic Fibbo and lower. Monthly, weekly, daily overbought, stating we're going to get bigger picture. Notice how when they all line up, you get these bigger moves. Go to the monthly even. When do these set up? When the monthly, weekly, and daily get overbought, you get the big moves. Get overbought together, you get the big moves. Get overbought together, you get the big move. Even most recently, they lined up. This doesn't look like much, but it was a lot of pips there. Notice the levels. We're up here. Let me get my crosshair on there. We're up here around 175, and we went down to 154. So that's over 2,000 pips right there. Doesn't look like much, but it's there. So this initial kind of chop sideways, and yep, we're still hadn't turned over yet. We initially started here, and that's why I shorted that, made some pips. Now we're getting right back in, shorting it again when that daily reversed this last week. On that Thursday going into Friday, I was able to make some pips. Sitting here, are we going to break out? Or are we going to disengage and go lower low? So any rally should be sold. And if you're long, be in a position of authority, because I really think this thing's about to take a big dive sooner than later. Pound yen, basically in the same boat. We got the monthly overbought. All these look the same. We got the weekly in overbought territory. So is it possible this thing could grind a little more? Sure, it's possible. The weekly's still up, but it's overbought. Monthly's overbought. Daily's moving back in toward overbought. Really haven't left overbought territory. So what happens if this disengages? Then we go back to this low and make a new low. But what's more important is notice this big abrupt push lower. That was very impulsive. This looks corrective since that push lower. Overlapping, chopping, grinding. And this looks like a bigger, from that initial push lower, a bigger kind of a three-wave correction, which sets up a lower low. That could push us down back toward the magic fibbo on the daily chart. Well, if that's not enough to interest you, go out to the bigger picture. I'm going to go back to the charting platform to show it to you. Go back over here to the pound yen on this charting platform, show you the bigger degree here. And this was very impulsive, right? Straight down, 5-wave. After that big run up, big 5-wave down. Look at what it did since the bottom. Overlap, 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 overlap. That's not conducive to a trend continuation with all this chop. You typically get a little 3-wave correction, it's done, and then you continuation. But this is a lot of overlap. So what this looks like, for those of you like ABCs and 1, 2, 3, this looks like the bigger degree A. All this chop, even a grind at a higher high, looks like what we call an expanded flat correction. And then we go C, back to the lows, so around that 180, 185, if not lower low. Monthly, weekly, daily setting up like it did here for that big 2,700 point drop. We should see potentially 3,000 or more coming. The question is, do we get it sooner than later or no later than later? Let me go back in our archives. Back during COVID, when we were down here, I said, made a bold statement, everything but a prediction. The pound yen's going to go up about 8 to 10,000 pips in a correction. That it would ultimately break this prior high and make new highs. Guess what happened right after we got that higher high? And our 8 to 10,000 pip journey played over those multiple years. We said, played out perfectly. We got that abrupt move lower. And now we got this corrective action. Be careful on this. I would not be loading the boat, going long on this. Well, you have 46 pips, you're a scalper. I'd be taking those profits. I don't see this thing just keep going higher. I see a big one coming. More importantly, go back in history when we get a financial crisis, and we're headed toward one very quickly, and we'll go over that with the markets. But back in 2000, dot-com bubble burst, we plummeted about 9,000 plus pips. 2007 financial crisis, we plummeted about, what was that number? 13,000 plus pips. Elizabeth, I'm coming to join you, honey. It's going to be the next financial crisis, whether it's the commercial real estate, 5 trillion bubble bursts, could be a continuation of war, could be all the money we're spending, infrastructure. There's so many problems in the financial sector that we're going to get another one. It's not a matter of if, it's a matter of when. So if we catch this at the right time and the financial crisis, next one hits, we can make some massive gains on the downside. So you look at the bigger picture, knowing a financial crisis is looming. Is it today, tomorrow? Probably not. I'm still looking for the markets to rip all-time highs and make some really potentially higher highs. But up and until then, I'll call the top when I see it. Then we can really short this thing. But in the short term, monthly, weekly, daily. So you go to the chart on that, and it continually shows that these things are at extremes. Unlikely it's just going to continue higher and higher when a monthly, weekly, and daily are extremely overbought. Got it? What do we know? When a monthly hooks and crosses, when you get a PAI hook, a trend momentum cross, you get slope angle separation, the weekly cycles down. When a monthly or weekly cycle hooks and crosses, the daily cycles down. When a daily hooks and crosses, the 4-hour cycles down. When a 4-hour hooks and crosses, the 1-hour cycles down. Well, why is that important? Because it's extremely high probability. And what if I trade options? When a monthly hooks and crosses, the weekly is going to cycle, and a weekly takes about 2 to 5 months to cycle. Monthly here, on the monthly chart, that's a weekly taking 2 to 5 months. Well, the monthly takes about 2 to 5 years to cycle. And that would fit with the next push of a financial crisis for us to get this thing to shift all the way down. And it's coming. Mark my words, what's happening on the pound yen and the euro yen, they're going to get a big monthly cycle down. Is it this year? Is it wait until next year? It's coming. And when it does, it'll take about 2 to 5 years to cycle down, but this thing's going to go plummeting like it did during the dot-com bubble burst. And I know I'm on a daily chart, so I'm not talking about this 2008, but you can see 2007 was right there. You see that one. And here was in 2016, not so much a financial crisis, but we did have a big correction in the markets. And then we see that correction there. It's coming. Just be careful. All right, let's move on. Spend enough time on that. Let's continue. What about the markets? Be careful with these rips. All right, let me go to the daily chart. Be careful. Actually, I already have it. I'll leave that where it is. Here's my ES already got lined up. We recently had the low. We talked about buying this dip. If you were watching us over the last several weeks to months, we talked about this price action. It was due to roll over. It was not only due because of the chopping, overlapping price action, that we absolutely needed a lower low. We got it. Perfect. We got the reversal just like we were looking for. Yes, this happened faster than I wanted. I was looking for this thing to go lower high, lower low, and take a few months to get up here and then go lower. Well, I was definitely expecting this bounce to go into this zone. Well, it exceeded it. Look at what we did from recent high to low. We took out the 618786 with that candle body. That said we had a 75% chance we'd go up here to 7140, and we still got about a 70% chance we test that 72 area. So be careful. This could either go sideways and continue, or we could get a bigger retracement. Are we going to get it? Just be careful. I would not be surprised to see a correction into the fall. So let me get my arrows on here for you. So we did a nice run up. Would not be surprised to see we could still kind of correct sideways, even get a correction here, even go a little higher going into the fall or into May, June. Then we go into the fall, get a bigger correction and push up, and then go blasting off for that last run into the year, maybe early next year. Then we get this big type of reversal, and maybe that's the beginning of Elizabeth, I'm coming to join you. So what would I be doing right here? We will say go long here. We exceeded where I expected to go. And now that we exceeded this lower high I was looking for initially, we reached the extension. So be extremely careful. This thing is either just going to chop sideways or we're going to get a correction. Where would be a good place to correct back to? This magic fibbo. So, ladies and gentlemen, be careful to the upside. This rally, which is historic, we haven't seen a rally like this since 1950. That was before I was born, a long time before I was born, actually. 1950 was the last time we saw that type of run. So typically when you get a run without any type of pullbacks, what's coming? Pullback. Notice who's sitting right around that zone. So what do? First area of support is going to be the Magic Fibbo. That's part of the software, the MPA PE5 version 5.0 software is part of that. And you get this low, and I'll run my Fibonacci's on here. We got that low. We go up to the current high, which is right there. And the 618 is in the 786. Notice where we are, 6780, 6702. That's a support zone. So I'm going to move this down to that support zone. And I'm going to change that to green because we're now above it. So let's change that to green. Everybody good? So where would we expect that this historic run that we haven't seen since 1950, can it just keep going? The markets can be, longer than we can stay solvent, they can be irrational. So I won't say no way it's going higher, but this is screaming, this run is exhausted. It needs a retracement. Could we retrace down here, hold, and blast off again? Sure. Or if we come down and we don't hold that support zone, then Houston, we got a problem and we're going to get another lower low. All right, so we have a low, we have a high, we got a 618, we got a 786 zone right there. Everybody good? So we got that support zone, 618, 786. This is support. So what do I think? Be careful going long on these. I think it's going to falter and start correcting down. The question is, do we hold the Magic Fibbo / support zone to retest this to bounce and go breaking out? If not, we come down here, we don't hold, and we start closing below 65.50, 65.30 area. That kind of sets the tone. We're going lower low. Lower low than our 63.50 over here. We'd start targeting 62.30, 61-ish. That kind of fits my weekly hypothesis where we may need to get a much bigger correction. I thought this, from this price action, would take a few months to just climb to a lower high. Then we would get a lower low going into fall, and then we would get the blast off year end, maybe early next year blast off. But the markets had other things on its mind. It was going to go faster. The good news is we said definitely we're going to go ripping because of this pullback we look for. We got the lower low we wanted, and we expected this to reverse. The daily reversed, start pushing higher. It just went a little faster, further than I expected. And again, I hadn't seen a move like that since 1950. Now what? Take profits. If you're in this long trade, don't expect this thing to continue. Look for a correction. When you get to the extensions, you either get a correction back toward the Magic Fibbo on a daily chart, or we don't hold the support zone and we go lower low still before we're done. That could be the 62, 61. Maybe we overshoot and come down. I would really like to see this big run up, get a big pullback into the fall, somewhere around that September, October-ish, get a big pullback in the fall, and then this baby launch into the end of the year, maybe first quarter next year. At some point when we get these upper quadrants up here, that's when I think we're going to get yet another massive correction. Got it? So giving you a big picture, small picture, and immediate picture. Immediate picture, if you had these 3 weeks of this ripping higher, congratulations, take profits. We're going to correct. Just like I told you over here with that run up, and we had this little correction here, and I said, nope, this looks incomplete. We still got it with this chop here. We got to go lower low. We got it. We got a rip. Well, this one be even more exciting. We get up here, we come down here into the fall, and then we go blasting off, which there's a little rule from that low to the current high, which we're going to adjust that because it's a new high. We get a 618 retracement, which happens to run into a magic fibbo. That would set the tone. We could even blast off to 8,000 or maybe even 9,000 before we're done. I called for this 75 to 78 range is where we would at least get to. Well, if we can get a bigger correction before then, we're likely even going higher based on the way price action's lining up. So in closing, go to your software, look at these software scenarios. I think I have it in here. Yeah, here's my Russell. Here's the software been running on the Russell. Talked about the Russell ripping higher, took profit one a while back, expecting it to go 3,000, 3,100. My next two take profits. This thing will run sitting here. We're in a position of authority on our stop loss. Yes, this is on-screen programming, so you can take your stop loss and move it deeper into profit. Right? So now I just loaded up about 1,000 pips on here from this price down here where we were. I moved the stop loss up to 2,400. Now we got that locked in where we originally entered to where we got in. So this is on screen. So I could push this up even further and say, well, we probably won't go any lower. And maybe we bounce off of that. So I can move it even higher. Now we locked it in at 2,500. So it is on screen program. What am I telling? We're due for a correction, but I'm not looking for this thing to make a lower low. I'm looking for a higher low, higher high to ultimately continue our targets up here. Highest probability, that's where we're headed. The question is, during that correction, where do we go? I would expect this Ichimoku cloud / magic fibbo area to hold, even on the correction, to then get higher low, higher high to ultimately reach those targets. We're running out of a little fuel here. Look at that run, just like the others. Look at that run on small caps, the Russell. And now it needs a little bit of a correction before we go higher high. All right? All righty, but that's the software in action. S&P 500. It's exhausted too. The daily's getting overbought. This is not a time to go long the S&P. After that run and the daily's overbought, look at the weekly. Weekly's getting near overbought territory. So yeah, it could possibly get us a little dip and another rip, but we still need some sort of correction in the daily. The weekly might need to depressurize a little bit here. And look at the monthly. Even the monthly is still in overbought territory. So as much as I think this is ultimately going to come down, it's ultimately going to top out and reverse. When Elizabeth, I'm coming to join you, honey. Right? What am I looking for? Just like in 2007, we actually got a cycle down. That's the last time we had a true monthly cycle down on that. COVID didn't quite do a cycle. This one over here didn't quite do a cycle. Look at this. Didn't make it all the way down, all the way down. We call this a big slingshot here. This came close, but this has to do it together. So what the next financial crisis, what's going to happen? This guy is going to go all the way down. These are going to go all the way down. And we're going to have a massive correction off of that. Got it? When is that going to happen? Probably not until end of this year, mid next year, first quarter. We'll kind of play it by ear when we get there and we see price action and thing. But I'm looking for eventually this monthly to cycle down. We've been slingshotting higher and higher and higher for decade plus since that 2007, almost 2 decades, right? 17, 27. So maybe that's the ticket. 2 decades later, we get another big one coming. and that's this cycle down. But this is not a time to go long S&P. It's time you take your profits because a correction is coming. And we're already starting to trigger lower. So that's another reason to say, look for that correction to play out. Yes, you want to take profits on the short side and be in a position of authority. So I'm not trying to tell you this is definitely breaking lower low, but we're definitely going to get some sort of correction out of this. Same thing with the Dow, overbought. The NASDAQ is overbought, and the Russell is overbought, and NASDAQ, where's my NAS? There it is. NASDAQ's overbought. So this is what we need after that insane run. We need a correction. So please be careful. And once you start on the short side of this run, expect we're likely going to get a retracement. The key level to be would take the low up to the high. Look for about a 618 type of retracement out of that over the next several days. So I'm really not looking at just one down day and we go ripping again. We do need a little bit more of a little bit more time consuming correction, but it is what it is. These look like we need a correction further down. We hit the extension. So typically you want to come back toward a 618 of that. We got a low, we got a high. So here's this green box / magic fibbo. So Mr. Tucson, after that run up, we typically would see some sort of three-wave correction, maybe come back down toward that magic fibbo to bounce and go higher from there. If not, and during that correction, we don't hold this support zone, we start closing below it, then we're going lower low, and that could set up that correction into the fall I was looking for. And I would love to see it come even overshot to the downside, because just like we were excited about buying here, imagine what it would be like if we can buy down here and it's somewhere around the fall, and don't pay attention to my scale on this chart, but somewhere around the fall we're down here. Then we get that rip into Santa Claus rally into the year, maybe first quarter, and this thing will go ripping higher, potentially even into the 8,000s. Any questions? So that could be quite the move. This thing could potentially, if we get that bigger correction, that's critical. We get that bigger correction into the fall, then by year end, first quarter, first or second quarter, tough to give exact timing, but this thing has the potential, if we could get down here, to go ripping into the 8,000s, maybe push the limit toward 9,000. No way we can go to 9,000 on EF. Then we can get the big market crash thereafter. So be careful on that. In the short term, we do need a pullback. So be in a position of authority on any shorts, but definitely be careful, not thinking this thing's just going to keep ripping higher. It's due overkill for correction. NASDAQ, same thing. It rallied right to the extension. That's why these are so important. When I said we break above this fibbo on here, and I told you that, we get above that 25.6, you can go along to 26.8, 27 zone. So we hit the target, 26.8. We're kind of bogging down. Is it possible we can get a little dip and then finally finish this thing before the bigger correction? Sure. But I'm expecting some sort of correction. And after this unseen, unheard of type of run, right? Look at that. Day after day after day after day after day. It's exhausted. We need some sort of correction. And a nice place to retrace back to would be the magic fibbo. Beautiful place to retrace. If we do retrace and this green box does not hold, which again, we got to adjust that with the recent new high now. Either one of these should do. Let me see. That high, 88475. That high, 91. So that's the high. So we got a high, the low to the high. You can see the 618786 is still pretty much in that same zone. So I'll just leave it where it is. What are we looking for over the coming days? It can either chop sideways and make one more pop, then we get the correction, or we just start correcting first. But if this correction doesn't hold this green box, we close below, we're going lower low, and maybe we get the same thing we were looking for. Maybe we get down here about 20,000 to visit the weekly magic Fibbo. And man, this could set up from that high to this low with the bigger picture giving us a 618. That could set up that much bigger move. So be careful with this. I'm looking for a correction. If we don't hold the support zone, we're going lower low. Lower low than what? This low. So if this retracement does not hold the support zone, we go lower low. And that might even bring into an overshot down to the weekly magic Fibbo. What if that happened? William Bruce, what if? It does pretty much that. By fall, we get a big decline into the fall. And then we're down here fall-wise and we're bouncing off that magic Fibbo. Then you talk about a good time to buy that dip. Man, this dip is setting up even for something much more special, because this thing would not only set up a big run to a conservative target, but if we can get this bigger retracement, this thing could set up the NASDAQ going up into the 30,000s, maybe even mid-30s. So this is a very aggressive target up here. This is a more conservative target. I still think we're getting there. I did not think this low would get there that fast. I was looking for a lower high, lower low, but that's okay. You play it as it is. So be careful now. We do need a correction. Do we correct and hold the support zone to go higher? Or do we correct and not hold the support zone to go lower low? I personally would love to see this so that I can rebuy like I did there to do that. All right, but all roads are leading to a correction, because this hasn't happened since 1950. And yes, it could be insane and continue, but it ultimately is screaming exhaustion. We need a correction. Even Goldman Sachs is saying all the big push that pushed the market higher is running out of steam. So not to say Goldman Sachs knows everything. I just know back in 2007, when all of those people were saying, buy, 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 the Dow's going higher, everybody, the markets are going higher, and they were loading up the boats with puts. And then we had the financial crisis. And I know I'm not pointing at it on this chart, but that's what happened. So be careful. But I do believe in the same right now. This is exhaustion. Needs a correction. At least a pause to chop around for several days. But I would like to see a correction. And if that correction doesn't hold the support zone, look out below. Do we go here to the first extension, or do we go toward that 1618 extension, which would put us toward that weekly magic Fibbo? This would be my ideal run. We ultimately got an expanded push, and then we get the big drop we're looking for into the fall, and then we go blasting off year in into next year. Then we figure it out. How do I know the markets are getting ready to correct? We look at a barometer that we use, and that is our heat map. Heat map, schmeat map, Vern, right? We start getting, look where we're pushing on a 20-day. How many companies of the S&P 500 above their 20-day moving average? You look at that and go, what in the world? That looks like a Richter scale with an earthquake hitting. What is that? That is 20-day moving average. How many companies within the S&P 500 are above their 20-day moving average? And we're pushing almost 80%. We're starting to top out a little bit. We did tap it up here. Typically, you get to 80 and above. Let me actually go lower, and I'll stretch this out so we can see some candle bodies in here. Set all those just lines. Refresh. Do it again. Let me stretch this out. The proper way of doing this. Stretch this out a little bit, little bit, little bit. So we start to see some candles. This is an oscillator. So if you haven't seen this before, you go to bar chart, go under, let me move this out of your way first. Go to bar chart, go under the market summary up here, right there, market performance. And then you could pull these up. That gives you the bigger heat map. Then you can click on the different ones. But this lower scale went from extremes. This is telling us anytime we get 80 and higher, we're ready for a correction. We're ready for a correction. We're ready for a correction. We get any lower than 20 and lower, we're ready for a pop. We're ready for a pop. And look how this set up the last several days. We got the big pop. Now we're at extremes. We're ready for a correction yet again. So how do I know when the markets are ready for the big Elizabeth, I'm coming to join? When how many companies above the S&P 500, above their 200 moving average? When we start getting 80 and 90% higher, that means 80 to 90+% of all companies above the 200 moving average. When everybody thinks it's bull, 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 the market's going to go forever. That's when you get the big corrections, AKA market crashes, et cetera, et cetera. This over here, if you look at the scale, we only go back that far. That's the 2007 financial crisis over there. So I guess I can move this down so we can see the year. But we were up near 90% market crash. Then we got the big correction in the 2000s. Here's COVID. Then you came into 2022, big market correct. Then we got the Liberation Day, dip down in here. So what is that telling us? We haven't topped out yet. This isn't the end. The markets are starting to break all-time highs, but we're not at 80, 90%. When we get there, that's when the big corrections come. And last time we're here was in 2021, and we had that big correction into 2022, right? So this is what I'm looking for when it's time to say, is it time for Elizabeth to come to join you, honey, market crash? When this guy, the 200 moving average, how many companies above the 200 are pushing 80 and 90%? Look out. We're nowhere near that. So this is why I still think we could get a correction on this one, not to come all the way down here, but get that correction into the fall and then go ripping up into 80, 90 as we get to those extensions, maybe in the early next year. We shall see. But I don't care where price is at the time in which we're pushing these. We don't stay, especially 90 and higher, we don't stay there very long. And then we ultimately get a big correction off of that. And I don't mean just a couple of days. I'm talking substantial corrections like this, like this. So typically, what does it do? It's an oscillator. It goes from extreme to extreme to extreme to extreme to extreme to extreme, back and forth, back and forth. So that, along with the software, monthly, weekly, daily lining up, you get these at extremes, and the software lines up together. Look out. And that's what's coming when I talk about Elizabeth. I'm coming to join you, honey. We're going to have the monthly overbought, the weekly overbought, the daily overbought on the software, and we're going to see this baby pushing 80 to 90%. 90 and higher is even better. That really sets the tone for look out below. Amen? All right. So that's what we look at. Short term, you can see why 5-day, we're up near 80. We already touched it, even on the 5. Look at that. That's, ooh, that hurts. But you got to do the same thing. You kind of compress that, bring this down, stretch this out so you can see some candles. Stretch that out a little bit more. And we already touched the 80s. We were below the 20s. We're back to the 80s. This is on a much faster scale because it's such a low, 5-day moving average. So a lot of companies can go from 20% when you get a sell-off to 80% when you get a little pop. But this is due for a correction on the smaller time frame. My 20-day is due for a correction. We reached 80 on that one. As you can see, we touched up to 80 here. So that's saying the same picture. That short term, we need a correction. And I agree with that with the software as well. Well, let's continue. What about the Russell? Russell 2 needs a bit of a correction, but I definitely think we're going ripping. We're going to that 3,000, 3,100 zone. This is definitely where we're headed, but be careful on this rip. What you saw that trade we're in it to win it, and we're going to stay in it to win it, and we're going to stay right where we are, let it continue to do its thing and run higher. And we're looking for this thing to go up to that 32, 3,000, 3,100 on this one. And I do think we're definitely going to reach it. Hint, hint, hint. We're definitely going to reach it, but we need a correction first. And we buy the dip and let it continue to run. Okay? All righty. How much of a dip? I'd like to see a 618, 786 zone come into play, and then we can go bouncing. Do we get the bigger correction like the other one? That would be fantastic, because since this run up initially in this initial correction, we did make another little pop. We can get a bigger ABC and get a bigger correction down here. That would set the tone. We might even go to 35, maybe pushing 3,800. Much more aggressive target. But this is a conservative target. I definitely think we're going here, and that's the one we're showing you on that trade. We're definitely running here. Just in the short term, we need a correction. Nikkei. Nikkei is bogging down at this same zone. This is in danger of a push lower. This is what we might need right here, Mr. Tucson. That rally kind of bogged down in the zone. We go lower low. This is a magic fibbo on the weekly chart. And this looks like an A, B, C correction. This would be ideal to get this thing to push down into the fall, maybe over here, September, October. So we just kind of chop and grind to a lower low. We can reach these extensions around 45, 44. Maybe it pushes toward the magic fibbo, which is still sloping upward. And if we can get that kind of pullback, what do we know about the Nikkei? We use it as global liquidity. I don't trade it to say wherever the Nikkei goes, then if the Nikkei is down for the day, then the Dow and the S&P and the NASDAQ and all our markets have to be down. But in general, that's the way it flows. So you come back further to this big correction during Liberation Day over here. We had the 2024. This was the carry trade unwind. This baby plummeted. What did it do? It pulled our markets down. Then we rallied into, and then was Liberation Day to finish this correction. Then this baby went ripping. Then I warned you about the correction coming into this, and this bounce into the zone. So this latest move, if you look at this rip up, and this looks like the A, the B, we still need a lower low to go to C. Now it's somewhere around that 45, 44. Yes, this is down about 40,000. You see 40, 41, but this is sloping upward. So we would love to see this start dripping down into the fall. And then in fall, we go ripping higher into the end of the year, into maybe first of next year, first quarter or so. And that could push us into not only 64, 65, maybe in the 70s, and could extend it out even further. So be careful that this run is exhausted. If this does this, right, let's just say, never mind anything else, we got the run up, we got A, B, and C does play out, and we see the Nikkei go plummeting down to 45,000 or lower, somewhere between that 40 and 45,000 range, then I highly anticipate ES is going down, NASDAQ's going down, Dow's going down here, Dow's going down, and probably even pull the Russell down with it. So that correction I was looking for, Harold's not off the table, especially with this bogging down in that zone, even though our market's all-time high, NASDAQ all-time high, Dow all-time, well, let's see the Dow. I hadn't checked the Dow. I don't think the Dow made all-time highs yet, but let me check it. No, it hasn't. So Dow's kind of like the Nikkei, bogging down in resistance zone, even though NASDAQ made all-time high and our ES made all-time high. These have not. That's a little confluence of events where this is more matching the Nikkei, and we're probably going to need a flush lower before then we can go blasting off. But again, I would say that if we get the Nikkei to do that, right, we get the Nikkei to push lower and we get down at 45, 44, 40,000, somewhere in this zone, I do not see ES continuing higher. I see it pulling back. I do not see the NASDAQ going higher. I see it pulling back. I see all of them pulling us back. Got it? And this is screaming we need a flush lower. That's why I'm saying be very cautious. And this current correction I'm looking for over the next few days could turn into a much bigger correction, especially if this Nikkei starts pushing lower low. Look out. It'll pull us all down. So in closing on the markets, ES is likely going to fizzle and give us a correction. Short term, if we don't hold the support term, we're going to go lower low than what? That previous low back here in March. Amen? Our previous little dip lower. And remember what we discussed this on ES and the NASDAQ, looking at all this price action, we needed a lower low. We got the lower low we're looking for. I was expecting this bounce, but I did not expect us to go breaking higher highs. I was looking for a lower high, lower low into the fall, and then go blasting off into next year, first quarter, etc. Santa Claus rally. That's still not off the table, but I think we're due for correction. And if we can hold the support zone, we are going to go lower low, and that could set us up for a big move higher. Otherwise, maybe we hold the support zone in the correction and we climb up into here, and then we look at that heat map and it's up at 80, 90% above the 200 moving average. And then Houston, we got a problem. We're going to get the crash sooner than if we get this bigger pullback to set up even a higher highs before then we get the bigger. But either way, we're here or we're here. And I go to my heat map right here. Everybody knows the heat map. When that baby starts screaming, and what are we going to look for? You go to the heat map right here, and we see S&P 500 when 80 to 90% of all companies are above the 200 moving average for the S&P. You come down further, you see it for the Russell. You look at for the Dow. You look over here for the NASDAQ. When that's there, it's time to look out below. Here comes Elizabeth coming to join you, right? We want to see all of these together. NASDAQ right down here, how many above their 200 moving average? This figure right here at 80 and 90, particularly pushing more 90. The Dow, 80 plus, pushing parallelly 90. This Russell 2000, pushing 80, preferably 90 or higher. And then the S&P, they got a few ranges of this. They got the sector rotations in here. You can look at it, or you can do it down in the same area, but it's the same. You get S&P 500 index that's above that zone, and it's pushing 80, 90 when the others are doing it. I don't care where price is, whether it's up at the more conservative target, it's up at this more nosebleed, aggressive target, look out below. And all you got to do is be here, because I'm going to tell you when that happens and give you opportunities to how do you trade it to the downside. We'll talk about some of those. So any questions? Be careful to the upside, because this is historic since 1950 run. We're due for a correction. Do we correct and hold the support zone to go higher, or do we break down and not hold it to go lower? I personally would like this to dribble down here into the fall. Summer doldrums and kind of just drift lower into fall. And then we go ripping potentially into the stratosphere by end of the year / first quarter, maybe second quarter. We'll see how that plays out. Amen. So back to the daily. We're exhausted. That is a hell of a run, quick, fast, lightning run that needs a rest, and it needs a correction. So in the next few days, I would say look for any rally to be sold and look for this thing to start declining in a correction. Let's continue. What about our UNH trade? Up beautifully today. We talked about this when UNH made this big drop lower, and I talked about buying some UNHG, and I said this would be a great opportunity to buy here. Well, Mr. Tucson, with this big pop, it was up over 18+% up here this morning as I was getting ready for class. I went ahead and sold some of my shares because that was about a 70-80% run on shares that quickly. Yep, about 80%. If you got near the low, even if you didn't, it was about a 75% gain. Say you got in at about 10, because I kept talking to her when it was around that $10 low over here. I said, it's a good time to invest and buy some shares. You know, I can't tell you what to do, no buy, sell to hold, but based on price action, based on that massive gap down, we were due for a gap fill, and we're still working on it. But you see what's coming. So after this today, big gap of that percentage, I went ahead and took sold some profits, right? We filled the gap. You can see my thing is behind there. We filled the gap. And this is a perfect time for us to take profits. Doesn't mean it can't go higher, but it means after that type of run, anywhere from 75 or 70 to 80+% pop, especially with that, it's due, right? It was due. And what did it? Earnings. Got a little pop on earnings, got a little pop on earnings. But how many times have we seen a pop on earnings? Does that mean the momentum's just going to continue and goes high? Possibly, but I don't see, right, Harold? A couple of reasons why I took profits on that UNHG today. A, it was up 75-80%, several hundreds of dollars. And when I see several hundreds of dollars, I can't help myself but to think about, is this time to take a little profit, so we let it run? Well, the markets are due for the correction we just talked about. And I don't see UNH, which is Dow country, heavily weighted by the Dow. I don't see UNH just ripping higher when S&P pulls back, NASDAQ pulls back, Dow's due for a pullback, Nikkei's due for a pullback after those runs. So between the two, the big pop and we're retesting prior highs right there. And right above that, we got another section of highs. That's going to be tough to crack. So this thing is due for retracement. Would I reload on the shares if we get a retracement down here that holds the 618? Or even better, we get that bigger decline into the fall and we start testing the lower lows again. Would I buy UNHG in those single digits again? You betcha. Right? We're in single digits down here. We basically almost doubled if you bought at the lows. And even if you got in around 10, that was about that 75+% pop. Plus the markets are due for correction. That's why I couldn't resist myself. Bank those hundreds. Hundreds are hundreds, no matter how you slice it. So what if we get a correction and it holds? Great. I'll buy and do it again because I don't think UNH is done. This isn't the market crash coming. This is the correction. When we get the big rip to do we go to the stratosphere? Do we get the fall pullback and then go ripping into the year? So if we can get that fall pullback, wherever these lows are, I'm going to load up again. And then do what? Hold it for the big rip into the end of the year, Santa Claus rally, and look for this thing to potentially get up in the 400s or even higher before we're done. But this pop needs some retracement, and look at where we're stopping. Right at that prior high. Can't make that up. So when I look at the software being exhausted, the market's moved historically, biggest move since 1950 type of move. That's screaming we need a correction. So why not take those profits off, wait for the correction to happen, and then we can get out, hopefully in the fall, maybe even push back toward the lows or even make a lower low. Would that concern me? No. We get a lower low into the fall, I'm going to be buying some more UNHG in single digits again and look for that thing to go ripping as the markets then go blow off top we talked about, and all of those NASDAQ, etc., where we said potentially we could be in the 30,000s. Well, imagine where the Dow's going to be if we do the same type of thing. So let me show you the Dow. I didn't look at that in a bigger degree, but here's the Dow. We're bogging down. We get a bigger correction. Then what? This thing could rip into the stratosphere. What is that? From the recent low up to the high, we get this ABC correction. We get a weekly pullback where the Dow goes lower low, A, B, C into the fall. And we see the Dow down here at that 40, mid 40s, low 40s. Man, would I like to buy some UNHG down at that area? You betcha. Because the projection is we're at least going to get here. And if we do get this bigger pullback into the fall, then this sets up going even blasting further to a more aggressive target up here. But imagine, Harold, if the Dow's sitting up in the 60,000s, right? 60 plus or more. UNHG is heavily weighted on the Dow. I mean, UNH is. So imagine if UNH goes ripping because the Dow goes ripping and we get to the stratosphere, that UNHG is going to go ripping times 2, leverage product. And this thing could be in the stratosphere in the 30s. And we were getting in the single digits down here. So I did take profits because I'm looking for a correction. Then if we get that bigger push into the fall, say October, September, something like that, and we're back in these single digits again, even if this thing makes a lower low, what if this thing goes and makes a lower low? Salivate, right? We get that push into fall, and then what? Dow goes ripping, blowing off that weekly magic Fibbo. It goes blasting off into the 60,000 or higher. This thing should go blasting off into the 30s or so. You're talking over a triple to get up there. I like it. I was happy with the 75, 80% I got right now. Imagine if it's 300% up here. I like it even better. So be careful. Look for the correction. Do we get the bigger correction where we go into the fall and get that lower low? That's salivate country. If we don't, we just get a 618. Then I'll buy in the low below the teens, maybe that 12, maybe 13. We'll see. But I do expect a correction to come. I digress, but you get the point. Okay, let's continue. Everybody wants to know about black gold Texas tea. Oh, here's gold. I'll do that next, but let me go to black gold first. Be careful with this. We did not make lower low. So all of this jawboning about oil prices, this, the Hormuz open, close, mines, this, that, and the other. Are we going to have a deal? No deal, deal. The bomb's going to go blasting off tonight, or what's going to happen? But all of that did what? Use this guy right here. And what do we see? All price action has been contained in those 2 days. This day here, the big blast off on March 9th, and this low on March 10th. We've been combined or confined into the zone right there, just chopping and grinding right in that zone. Based on this price action, I warned you the other week that push lower, this looked 3-wave correction. So this kind of states we really need to go lower low. I'd be very careful on these bounces. Yes, rockets could go flying and bombing, and this thing could go blasting, just like we said over here. How all that price action said we really needed a lower low before we would reach our 100 target. But what happened? I warned you, if rockets go flying, we're going to go there sooner. And that's what happened. But after that, this correction still says we came close to a lower low. We didn't get it. And this chopping, overlapping price action coming back still looks like the initial leg down, 3-wave correction, and we still need a thrust lower to get a lower low. If we do get that lower low, this could set up for a big bounce to go much higher. These numbers are not out of the equation, 125, 130, 150. Those are not off. Simply more rockets fly, we could be there lickety split. But this recent price action dictates we more than likely need a lower low. Lower low than what? This guy right here on March the 10th. So that's where the magic Fibbo's sitting. So stretch this out. Really looks like we need a low below that and we'll move toward this magic Fibbo. Any questions? So I would not be loading up on oil expecting you were breaking out right now. It could. It's like a lottery ticket. It could hit. Possible. The probabilities are low, but it is possible. Rockets fly, this thing will go, but they do come to an agreement. This thing's going to come down and make a lower low. If it then continues, then boom. Or what I told you the other day when this was trying to rally back up. Ooh, it looks like it's going to break out. I said, I don't think so. That looks three-wave correction after the initial move down. That was three-wave correction to a lower high. And I said, all I got to do is talk about the Hormuz is now open. This thing would go plummeting. Not bad. Now what? I think we're going to get lower high, lower low still, because this picture still needs a lower low. And then we'll reassess. Amen? So this is the target zone still. Ideally, location would be the 73 range, 73, 74, where that magic Fibbo is resting. And this recent ABC correction, this hasn't made a lower low yet. So this looks like it's just stair-stepping lower and lower and lower to get that lower low. All righty then. Gold. Remember I talked about this. This looks like the 1, 2, 3. Very impulsive. We did this with the dollar index. That's why I still think the dollar index is likely going to go lower low more than break out right now. But this rule holds too. This low, that high, we far exceeded the dimensions of an equality move. We went to extensions. I mean, this thing is way pushing extreme low. So this is likely the wave 4 correction. What do we talk about? 1, 2, 3, 4. That initial move was 1. This little chop grind was 2. This big impulsive move down is 3. This chopping and overlapping is 4. So as long as price remains below 5,000, this says we should get a 4 and we should go plummeting to a lower low to finish this thing out. We absolutely need a lower low. We don't have to go much lower, but we need a lower low. My target is that 39, 38 to 37 zone. So 39 down to 37 is the zone where I think gold is going to flush. I think gold will bottom and reverse from there to go breaking out again. So as long as price remains below 5,000, expect gold to go plummeting to make a new low. And my ideal target is between 39 and 37. Or Harold, what if we get an overshot? We go to 35, salivate, we go any lower. We do like a weekly retracement where this little guy is. That's where my weekly magic Fibbo is. Man, if we can get an overshot to where we overshoot this way, we're sloping upwards. We get an overshot, we make a lower low. Here's the initial target, somewhere in that 39, 37. What if it overshoots? That's the 3-day. This is now the weekly. I'll move up. You can see it's been sloping upwards. So there's my weekly one. If we can overshoot and come down to mid 3,000, because this is sloping upwards, this could take weeks to come down here. This thing could get down here. What if we get that? What if we get that overshot and you see yellow gold at anything below 3,700 is a steal of a deal. Unbelievable. I'm not trying to guarantee it's going below 3,700. I think it's going to make a lower low. All we need is just a tick below it. Could be a quick little rejection wick down in here in reverse, or it could actually get down here and bog down for 6 months and just do nothing. But if we get anything below 3,700, that's kind of a steal of a deal to start. Maybe I should be buying some miners. Maybe I should be buying some gold, some sprots if you want to have gold that backs up what it is, or GLD ETF that doesn't back up with physical gold. Any way you want to play it. But 3,700 or lower is screaming deal for the next run up to 7,000 to 10,000. That's our next target way up here. I think it's on my monthly chart. Yeah, there it is. 7,000 to 10,000 is our next zone. I don't think the low is in place yet. I do think we're going lower low. Ideal target's 39.37, but if we get an overshot to the downside, that is screaming, nice time to reinvest in gold, and we're going to get the next big run after that. This could still take years to get up here. I'm not saying, well, you need to buy it here because 2 days later it's going to be up here. No, we're talking years as the plan, but this is extremely high probability target. In the short term, because of this price action being below 5,000, we really need a lower low. So my plan, can't tell you what to do, but my plan is to nibble down here at 39.30, well, below 4,000. We hit 4,000 and lower, I'm going to start nibbling. Gets to 3,900, nibbling harder. Gets to 37, nibbling harder. Gets anything lower than that, I'm going to go real smorgasbord on buying some gold and hold it for the next few years, as it then will go blasting off from the low 30s. I should say upper 30s to potentially mid 30s, if we can get that low, to double at least. So say we get to 35, make it easy math, and we go to 7, that's a double. And we go to 10, that could be a triple potentially. Amen? So that's next. Correction to finish, then we buy and hold till we get to 7 to 10,000, like we did on that run. Any questions? So, zoom it in, call your attention. This is what we talked about, 1, 2, 3. All of this chop and grind is 4. You go, what are these two lines here? Remember what I told you about a wave 2 correction? Wave 4s are generally 3 to 5 times longer of a correction than a wave 2. This was the 3. This is the 5. We're right in the zone for this thing to go down and make a lower low. So that's why I keep saying, as long as gold is below 5,000, expect we're going lower low, and we're going to break 4,000. Amen? Any question on that? Now, this was like 4,100, just barely under 4,100. Let me get the physical low on that. That was 47.23. No, that's not right. I gotta take that off. That low was 4,098, just below 4,100. So all we need is something lower than 4,100. Got it? Lower than this low. But an ideal place to go to with the extensions would be down at 39 to 3,700. So this is why anything below 4,000 is nibble zone. Anything lower than 3,700 is an opportunity that we haven't seen in a while on gold. And that's when gold hit this low over here. And we were actually, when we go out to higher time frame, in the archives, we keep all of our classes archived. And way back, I made a bold statement when, and I'll zoom this up and stretch it out, bring this into perspective. But when gold made this run toward 2000, I made a bold statement before gold goes breaking out, makes this run to 3,000 to 5,000, that we would correct down to 1,000 before we made that run. Everybody good? So you can see over here, I'm on the wrong section. During this run, when we were below 2,000, I made a statement before gold would go breaking out, making its run to 3,000 to 5,000. We'd make this run down to 1,000. And look at where we got to, into 1,000 on these lows, right? Right in there. Then we would go blasting off. Well, my next one of these is as we get to 39, 3,700 or lower, right? The lower we go, the more that's why we want to nibble at below 4,000. We get to 3,900, nibble some more. We get 38, 37. Anything below 37 is like, go crazy. No buy, sell to hold, but I'm going to load up. We get below 3,700 and I'm going to hold it. It's going to take years, but I suspect it's going to blast off to my 7 to 10,000. Just like we did it back in 1900, go to 1,000 before we'd blast off. Well, this should go down to 39, 3,700 is the ideal target before we go blasting off. If not anything lower than that is extra gravy, extra Louisiana lagniappe to go blasting off. So remember, 39, 3,700 is the ideal target. Anything lower than that is get on your knees, look to the heavens and go, thank you. And then hold it a few years down the road when we get this thing blasting off to 7 to 10,000. Silver, still don't think silver is done with its lower low. Warned you about that with this big run up that silver would give us about a 50% retracement based on that crazy run up. That's exactly what we got. I still don't think this is over. I still think it's got to go lower low. All right. And silver, man, if we can get down to this 40 range, this would be ideal. So I'd like to see this baby just continue to stair step lower. Get down here to the 40s is certainly buy zone. Anything lower than that is extra buy zone, gravy. Are we going to get there? All we got to do is get lower low. So we may not get to the 40s, but you can imagine if we get $50 and lower, I'm all over starting to buy some silver. We get lower than that and hit this magic fibble on this weekly chart, which is in the 40s right there. Man, oh man, is that salivate country for the next big run up. And what's that run look like? You can do that scenario and that would push us into the 150, maybe 200. That's kind of my bigger term target over here. I didn't put a bubble on there, I guess not. But up here is my target up here, that 150 to 200. Amen. So what are we looking for? Lower low, preferably push to at least 50. Anything lower than 50 is like, okay, it's time. We push to the 40s and go visiting that weekly magic fibbo, which is in the mid to low 40s. Let me get that back for you on the weekly. Was right there at 41, 43, almost 44. So you can see that little line right there, stretch it out. It's actually a pretty fat line. So if we can get a flush down to the 40s, that is screaming triple, right? We get to the 40s, we're targeting 150 to 200. That is a triple, 40, 80, 120. So 40 to 80, double it again to 160. So there's your triple. And we're looking for potentially, it will take a few years to get there. So by no stretch do I think we're just going to dip down here in a couple of days and a few months later be in the stratosphere. Anything is possible, but this will more than likely take years to get up there, just like it took years to do that. Correct? Years to do that. So be careful with silver. I would not be loading up here because you're going to feel major pain before it's done. Before then, you feel like, ooh, that was a good investment. Even at the $70+ range, you're going to feel some pain because I do think we're going lower low. I think 50 down to 40 range is like the key level. Anything lower than 40 is a steal, but I just don't think we're going that low. So 50 is kind of my zone. We get to 50 and lower. It's a great time to add some silver to your portfolio and look to hold it for a few years until it goes blasting off into the $150 to $200 range. All right. So with that, let me finish up. I've been a little long-winded today, but Bitcoin, be careful with Bitcoin. I still think it's going to rally some more before we're done. Then we're going to go lower low. So I won't spend a lot of time on this today. We're going lower low. We're going to 50,000, 30,000 range. No ifs, no buts, no ands. So do we rally up first to go lower low? So this would be ideal. We grunt and grind higher in May, June. Then we go into fall. We go down to 50, 30. I'll leave it with the same scenario I just did with gold and silver. We get to 50,000. That's perfect time to nibble. It gets to 40. If it gets there, we nibble hard. It gets to 30. We really start holding, and we hold that until fall of 2029. Just like we bought below 20,000 and we went up to this target 18 months later, post halving, we got another halving in 2028. So I got to kind of compress this and move this back a little bit. But here's the next halving over here. We're going to go ripping into 2029, 12 to 18 months post halving. And the target is to be well above 200,000 and above. So if we can buy 50,000, that's a 4x to get to 200. We go down to 30,000. That's more like a 6, 7 plus X to go up to over 200,000. And this thing could rip much higher, but that's the plan. So buy low, sell high. We already know when to buy. Fall of this year, or whenever Bitcoin hits 50,000, we buy, 40,000, we buy more, 30,000, we go on a smorgasbord and buy. And then we do what? Hold it. It'll grind into the halving higher and chop and grind. And then 12 to 18 months, it goes ripping into the 200s. And we'll take profits when we get to that fall of 2029. And with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.